We have some data coming out here in the United States this morning, including the retail sales. Advanced retail sales supposed to decline by 0.5 versus a 0.5% gain. Less autos, plus 0.2, 0.3 versus 0.6. X autos and gas 0.2. So mixed data here. Producer prices are supposed to show a 0.1% gain year on year, 6.8 X food and energy, 2.1%. That also comes at 8:30. Business inventories come out at 10 a.m. 0.9%. That's the economic data that is expected here. Capacity utilization in Canada is supposed to show first quarter rise to 77.2 from 76.4. The euro versus U.S. dollar continued to move a little bit to the upside after some corrective moves to the downside. Took it to this old remembered line here at this point where the market had some resistance here, stayed into the downside, and then came back down to support. The move to the upside is corrected 38.2% of this move to the downside, and that's going to be our level of resistance. In addition to that, we have this channel trend line here. I'd probably be patient here, looking for the 144.77 on the top side here. Here, the bias seems a little bit to the upside for the euro versus U.S. dollar. We held the 200 bar moving average. Came a little bit below the 200 bar here, but found support against this parallel trend line just below the 200 bar moving average. Moved back higher, used the 100 bar moving average for a number of different bars here. Fell a little bit below in the early New York session, but moved back up to the upside. The move to the upside has been helped by an S&P reaffirmation of a Belgian debt at AA plus, and that helped push the euro versus U.S. dollar back to the upside. They're expecting perhaps that they would S&P would lower the Belgian rating, but that was not the case, and so we're seeing a little bit more positive bias here in the euro versus U.S. dollar. The sterling versus U.S. dollar had a nice sharp move to the upside and continued its move to the upside here today, finding resistance against the underside of this trend line. The trend line came in around the 35 level. I think we moved up to the 40 level here in trading in the London session before falling off. The fall off took the price below this trend line. The 5-minute chart went down to test 200 bar moving average, finding support and resistance in between 100 and 200 bar moving average on this chart. What is what I will note here is the moving average here is moving is going sideways, so we are losing some of the momentum. Either we're in a non-trending range type trade, or the market may correct further down to the 63.57 level, stay below that 100 bar moving average, and or stay around it, and we could see that rotation to the downside. But it does look like the market is getting tired here, as we spent most of the last few hours in a narrow range between about 75, and the high has been around 08, so only about a 33 pip range in the last few hours in the sterling versus U.S. dollar. Dollar versus yen is looking tired again. We moved to the upside on Monday's trade, went up, broke above the 38.2% retracement, fell short of the 50% retracement. This is of the move down from this high going back to May 31st to the low. The inability to hold up there and quick move back to the downside, including the move back to below the 23 level, has got to have those people who are long the dollar versus yen looking for a move to the upside after non-trending this range quite frustrated. So I have to feel a little bit more disappointed in the move to the upside, and likely to think that perhaps if I were to make a choice here, 80.11 is going to be the level that the market is going to move through in this currency pair on the next move to the downside. We'll see. The risk is a move above the 38 level, or above the 45 level. Range is so narrow here, but it's a matter of time before the market decides to move either one way or the other here in the dollar versus yen. I don't think that we can see this currency pair staying in such a narrow range for the longest period of time. We did have the Bank of Japan meeting today. They did provide a little extra liquidity to those people hurt by the tsunami, but and the earthquake, but some people don't think it was enough, despite the fact that the slower growth. There is expectations that growth will pick up. Maybe that's keeping the yen supported, but It just doesn't seem to be a currency pair that is in the dollar yen. It just doesn't have much upside here in it for it, and the longer people wait for that upside and it doesn't happen, better chance that it goes down. Dollar versus Swiss, speaking of being to the downside, tried to muster a little bit of move to the upside during this move here, but very limited as far as the range goes. Take a look at the hourly chart. Let's take a zoom out picture of it, and the market moved above these highs. When you have a move that gets above the 100, moves above the 200, you look for further momentum that might take the price up to something like the 38.2. You target certain levels like this old high here. We got above that level on Monday's trade, failed, and the market came right back down. It doesn't take long for it to move back down into its comfort zone. We have the 100 and 200 bar moving average converged here, which suggests that the market is poised for some sort of move. Either we're going to that direction or that direction. Those two moving averages come in around this 83, 85 level, and so the bias is if market moves above it, it's bullish. If market moves below it, it's bearish. And that's as simple as that. Let me zoom in here and take a closer look at it. It doesn't. It looks more volatile. Taking a closer look in here, I'll put a Fibonacci from our high that we saw on yesterday's trade to the low. We'll measure the retracement level, and retracement 38.2 comes right at that 100 bar moving average. So use this level as probably our barometer here in New York trade as we enter the trade. 83.92 above that level is bullish, but right now the bias is to the downside here in the euro versus Swiss. In Aussie versus US dollar, China did raise their interest rates, or raise the reserve requirements today, and that forced the Aussie versus US dollar down. What is it, about 10.20 is where that occurred. That's right at this time right here to the downside. The market went to the 100 bar moving average in the 5-minute chart and then moved right back up to the upside. We talked about that in our webinar on yesterday. Off the hourly chart, that spiked to the downside and moved to the upside, took the price above the 200 and the 50% retracement here, but the market has since come off a little bit, currently trading just below those two levels. Let's watch 106.48 as our clue level here today. Move above it, it's bullish. Right now we're a little bit below it. If you have a bias one way or the other, that would be a level that you can lean against to define your risk in your trading. Euro Swiss continues to be under pressure. Off the daily chart, the market reached new lows yesterday, and we were not able to sustain or move to new lows here today. So we saw a little rebound to the top side. Off the hourly chart, we're looking at resistance against this 50% and the 100-hour moving average at 121.50, 50.52 level. Let's keep that level in mind. Move above it, it's bullish. Stay below it. This is a nice level to sell against that level. New Zealand versus US dollar had that follow-up earthquake yesterday that forced the market to the downside here. Consolidating at the top after last week's or the couple weeks of not last week, so we've been in this narrow trading range for a couple weeks now here in the New Zealand versus US dollar. It is consolidating around our two moving averages here. Our 100 and 200 bar moving average at the moment currently comes in at the 81.97 level and 81.78. Those will be move above it. We have a resistance against the underside of this trend line at 82.40. That would be our target on the top side, but right now we are seem to be a little bit more to the downside. 81.79 is the 200 bar moving average. Down below, let's watch 81.36.30 as a support level. Below that level, we got this floor from yesterday's trading, where the market found support at around the 81.11 level. That's it. My name is Greg Michalowski for FXDD.